What is Revenue Ruling 2023-2 by the IRS? Mike Rakowski here, estate planning, asset protection, and elder law attorney. And there's been a lot of buzz because there's been a change in the law in March of 2024 that affects the step-up in basis when using irrevocable trusts. So let's start with what is a step-up in basis. So a great example of this is when passing real estate down to maybe your kids or your beneficiaries, your kids can get a step-up in basis in the property that you're transferring to them. What that looks like is maybe you purchased your home for $150,000 10 years ago. And now with inflation and where the real estate market is, the house is worth $500,000. Well, if you were to transfer the asset to your kid during your lifetime, they would not receive a step-up in basis, and there would eventually be tax owed on the difference between the $150,000 and the $500,000. But if you transfer it upon death, they get what's called a step-up in basis, and so they would inherit the home or the property as though they paid $500,000. So now when they go to sell it, let's say they sell it for $550,000 one day, there would only be tax owed on the $50,000, not the difference between $150,000 and $550,000. So I hope that's a good explanation of step-up in basis. So let's talk about this new rule. So the rule's saying in certain irrevocable trusts, when you pass that asset now to your kids, they will not receive that step-up in basis. So they'll have a higher tax burden. This only takes effect with certain types of irrevocable trusts. Irrevocable trusts that the purpose of these trusts is to take assets outside the taxable estate. So that's when we're dealing with high net worth families who have assets that exceed, jointly north of 25 million or individually half of that. The rules are changing on that every year and how much that is, but unless we're talking about trusts that avoid the federal estate tax, this is not an issue. You're still going to receive the step-up in basis when you're using, let's say, a Medicaid asset protection trust. That the asset is still part of the estate when someone passes away. So I hope that's helpful. That's IRS Rule 2023-2, happened in March of 2024. I know there's a lot of confusion around it, but that's my read of the change, and I hope that's helpful. Again, Mike Rakowski, asset protection, estate planning, and elder law attorney at the Rakowski Law Firm.